All right, guys, happy Friday, everybody. I had a pretty good trading day, and I'm now actually going to give a presentation as a recap that what I saw in Amazon earning play. That was a really good trading day, and a step by step, a screenshot by screenshot to tell you that how a successful trade works, what was in my mind, what was the progress, and what was the decision making. So hi, thanks for watching my video. My name is Andrew Aziz, and I'm the author of How to Day Trade for a Living. In this channel, I'm showing my daily trades on the US stock market. I hope that you enjoy the videos. Make sure to subscribe to our channel. Thanks for watching and welcome to my channel. I call this one Anatomy of a Successful Trade. Let's go step by step, take a look at it and see how it goes. So what was the trade? So the trade was essentially a 30-minute opening range breakup. And Amazon gapped up, it took an opening range breakup from below 141 all the way up to 144. And the date is August 4th, and by the time that I took this screenshot was after the close. Now I want to actually walk you through everything that I saw for the decision making. First of all, the steps of a successful good trade is stock selection. Very important to find the stocks in play. Something that has fundamental news, high volume or high order flow. Extremely important to have the high time on sells. The trade identification is very important. So if you want to go opening range breakout, you want to look at it at the VWAP, where it is compared to the VWAP. If you want to go long above, you should go long above the VWAP and short below the VWAP for the breakout. Trade execution obviously is very important. You look into the sign of the strength if you want to go long, or sign of weakness if you want to go short in the price action. Very important that look at the price action and candlesticks that you're actually seeing to make a decision, because you are a discretionary trader. As a discretionary trader, it's very important to recognize the price action and the information is available to you. For opening range breakout, you look at the entry above the VWAP with the stop loss just below the VWAP. Sorry, this is a typo. So below the VWAP, look at the level 2 and other indicators like ladder of the liquidity and which we're going to talk about. And obviously for the trade management, your entry is more important. The partials, 10% of the risk that you're taking, and then you bring your stop loss to the break even or fully exit at something like 10R or between 5 to 10R. Now let's walk you through a step by step of these ones and see what happens. So stock selection, Amazon, hit 12 months high in the pre-market. The news came out, so it was very obvious that there is an earning play. So the trade idea by looking at Amazon just in the pre-market, I knew that I'm going to trade it to the upside, because it gapped up, and I want to trade it the opening range breakup. So when the stock is gapping up, when the stock is gapping up, you want to go long on that. The gap up, you want to go long, gap down, gap short. Not always though. So I had this idea that if it stays above the VWAP, I want to go long on that. So I had this idea, but I wasn't 100% committed to that, religiously that, I want to do that. Because sometimes if it loses the VWAP, you can't do it long, it just continues going down and, sell off. And I have an example for that. Example of August 1st, AMD earning was that on August 2nd, it gapped up and then sold off all day massively, like crazy. It sold off. I have the example here for you. So on the August 1st, AMD earning, look at this. This is a post-market. This is a post-market earning. Gapped up. Next day in the pre-market was also still holding. As soon as in the trading day it started open, it just solidly destroyed coming down. So, just because it gapped up doesn't mean that you have to go long for it. And as you see, the previous day close was here, we're gapping up, and then we still had to gap up, but we, sold off, compared to the previous day, like 10-12%. This is a massive drop, and you really need to be careful. So just gapping up doesn't mean that you have to go long. And you look at the daily chart on AMD. For that example, this earning was here, gapped up here. Everybody probably was expecting that it's going to go up through this level, but suddenly collapsed. So it's very important to don't be religious toward the trading that you have. Okay, so the trade that I had was this opening range, 30-minute opening range breakup. So as you see, as I mentioned, that you had a massive gap up in the post-market. In the pre-market held the VWAP very nicely. At the open, you had this kind of a doji, and eventually you broke up. And as you see, we got a very nice move out of it. And eventually it ended with 10%, 9% up profit. Gap up on that. But now let's go through step by step. So what I saw on Amazon was that Amazon for about half an hour was really holding the VWAP, and just below the VWAP it was really holding. What I was looking at, it saw that really shows this doji and then these squeeze candlesticks below the VWAP. These are very, very important signs that really the stock is holding, you know, this moving average just below the VWAP. These are very massively bullish sign. So that's what I was thinking, that essentially if I go long above the VWAP and I give enough space just below the VWAP, then I have a potential to get a really, really nice move up. But the most important thing for me was to see very extreme sign of triple bottom, and especially with this very important squeeze on 2-minute chart that you see in these dojis, that the stock is actually not ready to go down, therefore it's going to go up. I did mention in the chat room that it's going to go up, it has to go up because it's not really selling off. So what happened? As soon as I saw a huge ask, this is entry, and the timestamp is very important. I like you to watch it in this clock in the screenshots that I took. The timestamp on ARCA, I saw that 142. It's very, very large ask sitting, and after that at 64, and you know at 104.05 and 010. So the asks are sitting here. Especially this one is significantly higher on the other side. The high of the day by that time was 142. So there is a potential to go toward the break of high of the day. So I went long as soon as I saw that. Put the stop loss obviously around this area, a little bit lower than that because I know it's a little bit choppy here. So I put the stop loss just somewhere around here, and I think this 80 cents, 60 cents was a good risk for me to to see if I can get from this stock. And again, remember, this is not a normal stock. This is a gap up 10% on earning, on massive gap up. So there is a potential for the breakout on that. So, and even I actually posted this on Twitter. So if those of you are following my Twitter, as soon as I saw that, I mentioned that. Sorry, the screenshot is a little bit not high quality, but as soon as I saw this massive asks on 142, I posted that Amazon big ask on level 2. Bullish or bearish, I'm long heavy, and obviously as you saw, I just took that 5,000 shares on Amazon. So what happened here? So we went up toward the 142 here, the high of the day. Again, look at the timestamp, 10:32. I held it through this pullbacks. The pullbacks really never lost the VWAP. Very amazing. So 142, you see huge asks are stacking up. This is a very bullish sign. These are huge seller. But why is a bullish sign? These are sellers. They want to sell their position. Why the price is going to go up? These are sellers, but they are not desperate sellers. You know, they are the sellers that they know the price is going to come to them. They are like these matadors that waiting in front of the bulls and say, hey, come on. You know, they know that the bulls are going to come to them. If they were desperate, if these guys were desperate, they would have hit that bid and then push the price lower. They would have sent a market order and then take the price down. But they're not desperate. They know the price is going to come to them. That's why they're standing up there. And you see, this is a 10:32. You know, we come down. And are these real or just fake? A lot of people think that these market makers are making it. They are real orders. They are getting filled. They go through the volume. Look at the volume here. Look at the time and sells exactly the same time that I took this recording at 10:32. So actually, some of it got filled, and you know, there's more now. Less ask is there. So again, look at that. I'm gonna go back in there. So there is a significant amount of ask sitting on 142, and look at the volume, 256,090 here. And then a few seconds earlier, after 10:32 and then 10:29, so at 10 seconds later, popped up. Some of them get filled. Yeah, some of them get filled here. That's a lot of volume here. 273,000 shares is getting filled here, plus another 87,000 here. There's another digit here. So as you see, there are less asks here. They might come back, but they actually got filled. They go through the transaction. You can see them. This is the importance of the order flow and understanding the level 2. What else do we have? You know, we popped up there, you go, boom, I actually scaled out on it. That was a good sign, actually. Instead of getting out, add into my position heavy. I made a mistake, and I did mention that in the chat, that I you know, this is a very bullish sign. Now I can add, my average is going to come a little bit down here, 141. Now I have a better average, and then I can actually massively profit from this. So it was a really good place to add. But I did partial. I had a heavy size. You know, this is my first R, and you know, at the first R, I partial 10%, and then it started going up. I started partialing 10%, 10%. 10%, 10%. But the most important thing is that the asks are still up there. It's a very bullish sign. That means that the price is gonna go continue going. I look at the time stamp, 10:38:38. So now we're gonna go at 10:59. We had a little bit of move up now toward 133. There's still a lot of asks sitting in there at 143. So do you think it's gonna break at 143 or not? Most likely, because the price action is very bullish. Sometimes it doesn't. Sometimes it goes down, but it still is very bullish. It's not a great place to enter the trade, but it would have been a very nice add along the way, because your averages is slowly coming down up, and you still have a much better average, so you don't get stopped out on the pullback. So 143, and then you see I looked at the ARCA, still 143. There's a huge amount of asks sitting at ARCA, which is the main market maker here, and then boom, we still wait a minute, what happens here? So 1045 comes 1055. We're going to go back again toward 143. It's still sitting there again, 1055.20. There's a huge number of asks are sitting here, and then I partialed out a little bit. Still we have this barrier here. They're still sitting here at 1059.50, and then boom at 11 right at 11.40 cents, you just boom popped up 20 cents. You're gonna watch this beautiful move up that, and went up 28 cents, pop up, and then you see that most of the asks are gone. And look at the volume, guys. These are actually the orders that went through. This is a very, very, very important thing to understand that. And so that's a complete trade and risk to reward that I had. Again, I didn't trade only based on level 2. I didn't trade only based on the chart pattern. The combination of all of this information that I was having was very important to get that. So again, the risk to reward here, I saw that really stock is not really trying to go down. There's serious support below the VWAP that is buying. Obviously, there were sign of sell-off as well. These are also the sign of concern. However, what was really helping me was that the stock was down 10%, up 10%. So there was a strength in the nature of the price action. So I went I could have stopped out. It's very possible that I could have stopped out, but as a trader, your job is to take good risk to reward trades and wait for the power of risk management to see that you can actually profit. Well, I think that was the presentation. So I hope that you liked this recap. If you did like the recap, guys, please like and subscribe to my channel. I hope that bring more and more high quality recaps like that for you. It takes a little bit of time to do the recording and the screenshots and everything, but I hope that it's actually very clear for you. And if you haven't really subscribed to my channel, please feel free to do that. Email me, andrew@bearabletraders.com, if you really have any question. Thank you so much. Have a good weekend, and see you next week for live trading. We did all this live in front of everybody in screen sharing, so looking forward to see you guys.